In Saturday's video, we talked about how we overall caught this as some kind of trap, but we are going to have to be very, very cautious going into this week as we are seeing some upward price action from XLU, and that's why we have actually given you a weekly range for XLU. Remember, this is our crash signal, and we're going to be talking about that and a lot more today as we get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta going forward, looking at GME and AMC as well. If you wanted to join the Patreon, I actually gave a weekly expected move for all of the stocks that we do cover on this channel, and that includes GME, AMC, Google, and Microsoft. So let's get into it. First off, we are going to cover XLU, and remember the crash signal. Just a quick brief reminder, the crash signal, it has to actually play out. Just because we say it is forming doesn't mean it actually has to play out this way. It can play out in a million different ways, but right now we're seeing the upward push, which is what we were talking about back when we said how it was starting to scale up, and we need to be aware of any kind of divergence that is formed here. So I did put up a weekly range here. It looks like the weekly range for XLU this week will be 74.31 to the upside, and we have 71.13 to the downside. Now, this will be very, very helpful. This is what the options market has priced in for XLU. So if we see a move above that, and then we see the SPY make the same move, you have a 68% chance for both of those to drop off, okay? 68% chance to land back in this zone, 32% chance to land up here by Friday close. So we are going to pay very close attention to this. Now, something that you could dig into here is the 2-hour. The 2-hour looks very similar to the SPY here. This is why we're following XLU, the utilities. Now, what could happen from here is, what if this is a prolonged move? What if this is actually going to, pop up to here and then turn back down, and then we get a 2-hour divergence, kind of like we did right over here. Okay, between these 2 points right here, we had that divergence that told us weakness is coming, and then we got a rejection divergence right here on the inability to turn back up on the MACD, confirming a new high. Okay, so right here we have the double top. Now I'm saying, what if we're going to create this? That would be the prolonged move. We just have to see what happens overall on Monday, but there is a shot that we're just going to see this pop up and then drop right back down, giving some kind of big trap, and we can see maybe a divergence across the way. We will be paying attention to that, but remember, we need to make sure that these things are actually confirming on the daily scale to get that crash. As I flip over to the SPY, it looks very, very similar to XLU, doesn't it? It looks very, very similar to XLU. We had the rejection right here. We had slight divergence, almost not even divergence, just kind of flatness up here of the MACD, nothing on the RSI. So a little bit different than XLU, but right now it's catching up. This is why we were able to catch this move. This is why we were able to catch the bottom. I took a trade setup here and I was able to make some money. That's great. We still need to cross up into positive territory. So let's pay attention to some lines here, and we got a lot to go over with these lines on the screen. Everything has been updated. Everything on the Patreon, the monthly expected moves are on there as well for each individual stock that we cover. That does include GME and AMC. So what do we have to the upside as far as the month of June goes? 541.87 is as high up as the options market is priced in to go. Now, something unexpected could happen, right? We could end up here, but we also could end up here early on in the month and end all the way back down here, right? So we want to pay attention to this going forward. Nothing happens in a straight line. When I do talk about a crash, I think that we are going to see bumps along the way. I think it's going to be in the form of a bear market, but that doesn't mean you can't see significant drops. That's why you got to manage your risk. That is what is on the course. That is only $100 today, and we'll see if we're going to update that. If we're going to see this signal proven, I'm going to update that and make it $100 for probably the whole month of June, but as of right now, it's just for today, so I'd highly encourage you to grab that as that sale is ending. So what do we notice here for the SPY? Well, we need to pay attention to some weekly expected moves because this 2-hour might turn up and go positive. So the weekly expected move for the SPY, 534.87 to the upside, and we have 519.87 to the downside. Okay, so we have to pay attention to this. If we cross up on this MACD, which XLU is already crossed and it's already got some green bars, so XLU is a little ahead of you here, we could just see us keep going. Okay, this could be some kind of squeeze. We have to pay attention to it. The VIX gave us that 85% chance of some kind of down day in the SPY, some kind of red day in the SPY. That could just be an indecision day, that ends a little bit down, and that's all you get from that. Just pay attention. It doesn't mean there has to be some big volatility like we saw on Friday. Going forward, though, we need to pay attention a little bit closer to Monday. Monday, we're going to see these lines right here come into play. The red lines are your daily expected moves. So 530.14 to the upside here, and then we have 524.60 to the downside. The crazy thing about all of these, this weekly expected move, is it's slowly scaled up over the last 3 weeks. So the implied volatility is going up throughout all of these stocks, throughout all the charts right now. Every stock that we cover has a slightly higher implied volatility than last week. So what we want to pay attention to first, if this is confirming, right? This needs to confirm. If this is going to confirm upside, then that would say, hey, positive territory. What happens when you cross up into positive territory? Well, we usually test the high and go make a new one, or go make a new one. We could double top. We could do all kinds of things. I think we're going to end up somewhere in this zone sometime this week, depending on how it plays out. And then we'll see maybe a rug pull and see that XLU SPY signal for some kind of crash. But as we go into the shorter time frames for the SPY, we're seeing the 30-minute here, this level, very, very important. Maybe this is where we actually start to see a pullback, okay? The 30-minute is going up to the upside, and that can just continue. That can continue. So if we see that craziness continue, okay, but this is a point where divergence could come. I would say if we're going to see a rapid move, we need some kind of gap up. We need some kind of gap up above these ranges here. All of these ranges, if you gap above them, you can then use them as support to head higher. That's very important to understand. Now, as you are making that move, we gap up early on in the day. We just have to pay attention to any kind of weakness because you still have a 68% chance to land in that daily expected move. But daily expected moves, I tell you all the time, crazier stuff happens. The way I always talk about it is, it's like a roulette wheel. If you sit in front of a roulette wheel for 100 spins, you're going to see crazier stuff than if you only sat in front of a roulette wheel for 10. Okay, this is like your 100 times. This is your 10 times. Okay, so you're going to see less crazy stuff as the ranges go up in time, right? So daily only has 24 hours or so. The weekly has 5 days, and then the monthly has about 26 days this month. So we're paying attention to all these things. I wouldn't be surprised if we go slightly positive and then we pull back, get some kind of little left shoulder, or right shoulder, sorry, left head. We go up to this area, maybe we pull back down and create like a right shoulder for a liquidity grab, and then we head up later on in the week. We have a ton of rocks in our stream, so we have to be on our toes. We are probably going to get whipped around just a little bit this week, unless we see just some kind of full-on squeeze and we get good data all week. All right, the Qs, let's just get through the lines real quick here. 468.25 to the upside for the top side daily or monthly expected move, and then the downside monthly expected move, 433.17 to the downside here. And then as far as the weekly goes, what do we have? 458.77 to the upside for the weekly expected move by close Friday. Remember, 68% chance we land in this zone. This is by the end of the month, the whole yellow areas. And then the red lines here are going to be your daily expected moves. That's 453.29 to the upside, 448.13 to the downside. So there's a little thing about reading into this daily expected move, and that is, well, the Q's like just now crossed over. So they're not looking as overcooked as the SPY at this point. So they actually have some room to run here if they want to. If we wanted to see a gap up and go, that would make sense. And a lot of stocks in the post market were making higher moves. I believe Nvidia was up a few bucks. I think it was Apple or something like that was up a few bucks as well. So we could see some kind of gap up. But if we don't see that, it makes sense. Maybe we need to consolidate in this area before we break through. So I'm still looking at this. I mean, on the 30-minute, you technically have to be bearish and you're just a contrarian bull. But this strong of a V-shaped recovery, we have XLU that's way up here at this point. That is something to pay attention to. I think we're going to end up seeing upside sometime throughout the week and end up here somewhere. Now, we did mention how the Qs did not have to make the crash signal. Okay, the Qs do not have to make the crash signal. You see, they just crossed over in the MACD. They didn't get a decent pullback here. Sure, it pulled back in one day, but I don't like to take calls on a stock that crosses over in this MACD. And that's just because the daily momentum is stronger than your 2-hour, your 30-minute momentum. So any kind of 30-minute pull up could just drop you right back off. But this does not have to make the crash signal. And I think that's important to understand. This could just go up to this area and then get some kind of double top. We could just get resistance right away at the weekly expected move. You notice that you wouldn't really have the best divergences here, and you're not even that oversold up here, so or overbought up here. So just note that if XLU and the SPY make that divergence like this, the Qs don't have to. So be careful in case some kind of lower high shows up for the Qs. Apple, a lot of people who take the course ask, what stock do you trade the most? What stock do you trade the most and use this strategy on? It's Apple. I've used it on Apple so many times, I can't even count. I used it on Apple for almost like a whole month and a half straight, just one stock. I just did it back and forth and it was great. So what am I looking for here? Well, these divergences up here were kind of wonky for the 30-minute, right? So we're going to go into the 30-minute in a second and see if that's turning up. But right now, I would like a better point of divergence between these bigger moves, right? I think we have a chance to see some kind of run up, get some kind of full retest of that trend we broke out of. If you need to see that, we show it on Saturday's video. Go click over there. But then we actually get a confirmed point of divergence that kind of has a nice wave to it. That is more clear to me, and I like my setups to be very clear. If I wanted to, I could go into a 4-hour, and I'm probably just going to see some kind of 4-hour divergence this week outside of the weekly expected move. So if this doesn't confirm that, you have to make sure these things are confirming. If this isn't confirming that downside move, and once again, you are still technically in a positive trend, so this would be a contrarian signal, but you can tell we're getting that crash signal at the same time. You have to make sure these things are actually confirming. Let your signals do everything for you, and you just click the buttons at the right time. You just be aware of how to use the signals, and that's what we're teaching you in the course. It's only $100. I highly encourage you get it before this week starts, because it is going to be a wild week. We have so much data coming out. We could really get ripped around, and you need to know how you cannot get screwed. Tesla here, I am looking for that similar signal. Some kind of 2-hour divergence outside of the weekly expected move would be kind of telling. Now, even if you do get this to confirm, I'm just pointing out important things to keep in your brain and know that you need to manage your risk. Even if you see some kind of drop, they can rig it. So if you do see this form and you take a trade and this starts to go down, you have to be aware of how you can get screwed. And if that just sees that turn back up, what is stopping this from making some kind of triple divergence? What is stopping this from just continuing up? You have to be in and out of trades because you don't want to get screwed. Taking profit is the only way to actually make money. Right? You can be green all week and then you end up red by the end of the week because you didn't take profit, right? We talk about taking profit is very important. We talk about it in the course, but right now it looks like Tesla could see something downturn. The 30-minute here, well, what's happening as of the end of the day? We got a little curl up at the end of the day. So right now it's technically a contrarian bullish signal here. You're still in a negative trend, but with this type of momentum and the momentum we just saw come into the SPY, I do suspect that we're going to head up from here. But I don't think we create some kind of little divergence here. I think what happens is we get a big surge up and maybe the 30-minute gives us a hint of when that 2-hour divergence is actually going to complete. This is how you have to look at it. You have to see if there's going to be a daily divergence, a 2-hour divergence, and see if you can find something on a shorter time frame that is showing you weakness that could complete that divergence. That will really help you out. It has to be able to confirm. So if you see weakness that could confirm it, that could be your opportunity to get a little bit better position there. Amazon's been beat up, and I'm going to talk about it for a second because a lot of people saw these signals. I thought it was good signals, but I want you to notice how we didn't necessarily talk too much about it on Patreon. Really, the only thing we talked about on Patreon, and we mentioned multiple times about Amazon, how you have to pay attention to how you can get screwed. The thing with Amazon was I didn't take a picture of this and post this to Patreon. I posted IWM because I felt like that was the stronger play. I didn't think that this one was very good due to the fact that I thought we were building up a trap. And what happened? Well, we saw that confirm, we saw it go positive, and then you might have said, oh yeah, this has to go up forever. This is where risk management in the course, the last video of the course will really teach you how to get in and out. It literally tells you exactly what to do in this area, and it's a little different than what we're doing here, but this is still good. This bar right here at the end of the day on Wednesday told you there is no reason for Amazon to go up right now. There is no reason. Actually, what it's really telling you is there is risk because you're close to the center line of Amazon going into a negative trend. So if I say, oh, this stock's going to go higher, why would I continue to say the stock's going to go higher when my signal is telling me, hey, there's a probability that there is going to be some major downside. And then you look at XLU, you look at the SPY, you look at the dollar, and you go, oh, they're setting up a trap. I need to get out of this. That's how you have to look at it. You have to be like that. And if you're not good at figuring this stuff out, then I'm going to encourage you to do something else. Okay, I'm going to do something real quick. It's totally off topic of Amazon. I'm going to go over to Apple on the daily. Okay, this doesn't mean that every one of you out there has to be some kind of 30-minute, some kind of trader that has to watch stocks all the time. What if you were just patient? You work your job, you do a good job, and then you just save money and you invest your money and you trade your money based on daily signals. This right here is a triple divergence on the daily scale that confirmed right here. What do you have to do around this area? Well, this is a great buy. It's going into positive territory, and look at that run up. This is plenty of money that you can make slowly over time while you work another job. Look, 12%. And I just want to say this because I think everyone thinks that they could be a trader, and everyone thinks that this information that we give means you have to do it on the shorter time frames. You do not have to do it on the shorter time frames. You see less crazy stuff on the daily scale. So that tells me if I see a triple divergence on a daily, oh, that's a great signal. And look at that. You could have made 12% here. That is more than most people make in an entire year in the market. So I wanted to point that out. Going back over to Amazon, we're just going to check on it on the daily, actually, because if we are going to see some kind of run up, maybe this was some kind of fake out, right? Well, this daily is going to curl up and confirm that. Okay, so the daily has to roll up, but just note, if we start squeezing very early on in the week and we get outside of those weekly expected moves, maybe we go test the monthlies in the SPY, XLU gets outside of its weekly expected move, just be very careful. I'm still leaning towards some kind of lower high forming for Amazon. I do give you the weekly expected moves, the monthly expected moves for Nvidia over on Patreon, and if you're going to try to trade this, first of all, I keep saying this over and over. This one is going to be very hard to trade. It is manipulated to the upside. The big boys are manipulating this to the upside. So they're going to trick you as much as it takes until they can hurt the most amount of people. So why even put yourself in that ball game, right? You could just trade a different stock. There's plenty of other things that could make similar moves. Microsoft, Google, things like that. AMD that could have a good setup that we're going to talk about next. But, well, let's break this down at least. Okay, so if you were looking to do anything with this, I'm just saying from a learning and educational perspective, this is going to be a hard one to do, but maybe it becomes simple and maybe we can take a trade on it. Maybe I'll try to take a trade on it just to show you guys how complicated it might be. But what do I want to pay attention to? Well, right here, we're not crossed over on this MACD on the daily scale. Now, when that completes, maybe we see XLU in the SPY completing that crash signal. That will be huge. If we are going to crash, this has to crash. This was another reason I felt that it was a trap in the overall market. If we were seeing a major pullback and some kind of major top at that moment, then I would suspect that Nvidia is dropping off at least down to its 20 to test its 20. It didn't do that and it started to turn back up. It's not turning over on this MACD. So what do we want to go into here? The 2 hour. The 2 hour, I think if this is going to be simple, then I think this is what happens. I have this point here of 1,140 just marked off. If you want the exact weekly expected moves, those are down in the description under Patreon, okay, for Nvidia. What I think could happen here is if we're going to see another down push, I don't know because the Qs weren't the most strong thing. But what could happen is, what if we just create a very simple 2 hour divergence? This would be a sign of weakness. This is a sign that it could roll over the daily chart. I've studied this to a T. I've traded this for a long time. I've traded based on 2 hours, dailies, and 30 minutes for a long time to know they are my favorite charts. And I think they are very telling as it comes to momentum. I like it better than hourly charts. Okay, so what could I see here? Well, what if this actually makes this sign right here and tells me there is weakness? Well, first of all, the 2 hour is not negative, but that is a contrarian signal that something bad could happen. Then I can see if that daily rolls over. I think this has a very good shot to happen early on in the week if we're going to see some kind of downfall throughout the week. But because we're going to get ripped around this market, what is stopping this from turning back up one more time? Nothing. Nothing is stopping it from turning up one more time. That's why you have to be risk managed. This is going to be a complicated one. I might try to trade it as an example of how I'm staying risk managed when I do see you guys live. The reason that I'm leaning towards Nvidia making a simple signal is because I think AMD has the potential to make a simple signal. And this is where I'm saying, like, you don't have to do the most, I say it's the most manipulated stock to the upside, which means if you're trying to take a downside play, they will try to trick you as much as they can to take their money from you. They most likely are going to try to take as much money from retail as possible to pay for all this AMC and GME nonsense that they got themselves into. It's worse this time, and therefore they have a lot more to pay for. So when it comes to AMD, what can I notice here? Well, we told you about there was going to be a 2 hour divergence. We said, watch out for a 2 hour divergence up here. That ended up happening. I took a trade on this based on the 30 minute, based on my strategies that you can learn in the course. I took my trade right here. I've done it for a long time, so mine can be a little bit different, but in the course, it's to keep you as safe as possible using these strategies, okay? So I took mine a little bit earlier than you're supposed to according to the course, but that's because I made the strategy. I've been doing it for so long. I know how to find the exact point, and it's very difficult to teach people how to find the exact point. But I find you the good points. This point right here told you, hey, this is a potential for this to go into a negative trend and reverse from a positive trend into a negative one. Why? Because there's a divergence on the MACD, there's a divergence on the RSI, and you have that upward price action. The weekly expected move was right here. Okay, so all of the things that we pay attention to came into play with AMD this week, and we see a drop. I made money off of this move, and I said, I think this is going to curl up one more time, maybe to make a 30-minute divergence here or a 2-hour divergence in the future to kind of really fake people out. I'm glad I had that assessment. Yes, I could have made more money on this downturn. We pointed out 160.83 was the point to pay attention to. That's exactly where we headed towards. And then what happens? We see the rigged move at the end of the day. So what do I think could form here? If this happens early on in the week, I would really watch out for the rest of the week because volume's coming back into the market. But we could see this happen. Pay attention to where that weekly expected move is, but if you make some kind of double top, some kind of triple divergence over here, this would be very telling that you're going to see weakness. Now, I'm going to give you a big hint, something that we talk about in the course. Why would this be able to have more weakness than right over here? Try to answer that for 2 seconds. 1, 2. Because we are closer to going into a negative trend, which means over here, yeah, good shot to go into a negative trend. Over here, holy crap, great shot to go into a negative trend. So if you see these things form, all you have to do is react. But don't just say, oh, I'm going to take a trade up here because it could happen. Don't go based on if it could. Wait for it to confirm and do your risk management. It will really help you out as a trader to start reacting to these things, thinking of what can happen in the future instead of trying to guess because it goes above a line or hits a trend line. Let the signals tell you exactly what to do. And if AMD sets up a triple divergence, the bad thing that can happen, the daily scale could roll over. Now, what is it about the daily scale that's very bad? If it crosses over, if we start to lose 160.83 and cross over on this MACD, we can see a negative trend. Do you want to see what happened the last time AMD went into a negative trend? It went into a negative trend right here. During this bounce, it stayed in a negative trend and rug pull. And then we went sideways. People probably bought a little bit and rug pull. This is what can happen in a negative trend. Very, very bad things. And AMD is just on the edge of turning down for 1 or 2 days, and it's going negative. And you could see dramatic price action to the downside to test something like 140, to go all the way down to 133. And hell, if we're going to see a bigger type crash, you could head all the way down towards 120 for AMD in the next few months. Now, this is important, and we're doing this on the daily scale. We're going to go into the shorter time frames for Meta. What did we point out? Well, first of all, we said the support level at 453.08. If we don't lose that, then we don't have to be too worried. But if we would have crossed that, we would have crossed on this MACD. What's the problem with this MACD? It's even worse than AMD. It's even worse than AMD because it's not even trying to go positive yet. Now, I think it might this week. I think it might flash positive for a second and then start to roll over, and we'll pay attention to that. But just notice it is in a negative trend. You have to talk negatively about it. If you're positive on Meta right now on the daily scale, you are technically a contrarian bull. You are not bullish trend right now. But that's important to understand. Now, as we go backwards into a 2-hour, what can we see about the 2-hour that's a little different from the daily scale? It's trying to turn up, and it's trying to turn up in the other direction, which tells me what could happen this week. Well, what if I make some kind of triple divergence? What if I make a divergence? There's already a divergence here, there's a divergence here, and then what if we pop up outside of a weekly expected move, which is over on Patreon, and you see a little divergence here, and then you have divergences all across this whole damn thing. You could just see this pop up briefly and then get rug pulled again. Everyone faked out that this is going to be some kind of major short squeeze, but really it just lasts for 1 or 2 days, and then they rip it away from you again because they might have to pay for AMC and GME. That's something to pay attention to. We'll take a peek at the 30-minute. This is crossing over. It's still negative, so you have to talk negatively about it. But it is contrarian bullish. So in the short time frame, you're thinking, hey, this actually looks pretty good. And it's not overbought. It's crossing the center line in the RSI. The 30-minute is telling you like, hey, this looks pretty good here. If it could get above this 200, even swing traders might get in that move. So if we go up to this area, what is stopping it from extending for some time and making some kind of 30-minute divergence? This is the type of thing you want to look for while paying attention to a 2-hour divergence at the same time. This point right here would be a better buy. The 2-hour divergence might complete a little sooner and you get in a little bit earlier. And you can manage that risk based on what we teach you in the course and see if there's going to be another push up, you will be out of that move instead of getting screwed by these market makers. They are going to try to screw you as much as possible. All these big guys, they need to make as much money as possible right now to pay for this AMC and GME crap they're doing. You can see it across all of the data. It is happening and you need to pay attention to it. The reason you need to pay attention to it is because of little things like this do matter. GME, GameStop, it is positive on the 30-minute in a positive trend. That is a big deal, but you need to be positive in positive territory with positive trends crossing up in the MACD. You need that on the bigger time frames as well. So we're going to go over that right now. Where is the 30-minute? Well, if this sees some weakness, where could it go? It could cross that center line. So that's not going to be the moment. But right when everyone gives up, maybe that just slightly curls back up into positive territory and the 30-minute was your signal. Okay, you'll notice here, we curled up right here with divergence for GameStop. Very, very steep divergence, right? We talk about the significance of divergence in the course. Is very important to understand. GME told you to buy right here. GME's signals said the momentum could go up into positive territory. Good probability that that happens right here at about 1850. And it went all the way up to 2690. That is a huge, huge gain. That is a huge, huge gain of 43% in just a matter of hours. Okay. So this is something to pay attention to because this is a 30-minute chart. That's just 6 bars. That's literally like 3 hours. You make 43%. There's money to be made if you can learn these type of signals. Now, like I said, doing signals like this is not for everyone. It's like a sport. Not everyone can be good at these shorter time frames. Maybe you aren't as quick as other people. Maybe you're not as diligent as other people with managing risk. That would tell me maybe you don't have time because you work a job, so you need to pay attention to a different signal. Well, let's go a little bit further down. This would mean I don't have to pay attention to it as much because it's on a 2-hour. A 2-hour chart here means what? Well, I can curl up on this MACD and go positive. Right now, it's going positive. That is a good thing for the 2-hour. The only problem is it's still close to negative territory. So if they want to rig this a little bit more, they pull this down, but maybe a 2-hour divergence sets up. You can be patient with this, see that 2-hour divergence, and then boom, there's the point to get in, and you didn't have to go through any of that turmoil on the 30-minute. You don't have to sit and stare at stocks all day. Now I'm going to show you the very last signal that GameStop's most likely making that short squeeze moment, or at least some kind of squeeze higher to test a higher level. When this curls up on the MACD, GameStop, everyone in the media telling you this is dead. It is not dead. It is not dead. It is in a positive trend. It is in a pullback. It has a probability to go negative. The only problem is where it crossed was very far away from the center line. So it has still a lot of more work to do to go negative and actually be considered in a bearish trend. Right now, it is still in a bullish trend. You are a contrarian bear if you're bearish on it right now, but the shorter time frames are all going bullish. So this is telling me if this curls up, if I get one day like this or 1 or 2 days like this, then that would tell me, it looks like GameStop could make a move higher. Now, this is a rigged stock. Okay, so it is being tried. They're trying to force it to go down. So if you take an upside play, just like everything else in the market, we tell you how much money you can utilize based on how much percent of your money you have you can utilize when trading. That way you're not going to, absolutely lose an amount that's going to hurt you. This is a stock that you really want to encourage that. You really want to encourage saying, do not use an amount of money that is going to hurt you. Maybe use an amount of money that if this did make this run, it could maybe be something that saves you for the next year or two. It really could do that. I've looked into the data. It really could go to 100. It could go to 500. I have data that says it could go to $30,000. Now, do I want to hold this till $30,000? No, I want to pay attention to these signals. And then if it curls back down right here, then this was some kind of fake pump. And then I want to get out. If this makes a divergence here, why would that move be happening? And then I get out. And if it curls back up later on, I get right back in. That is what being a trader is. But trading on a daily scale is perfectly fine. You will make plenty of money. I used to only trade on the daily scale when I was a swing trader. When I was only swing trading, I used to only trade on the daily scale. I used to make about $3,000 a month. And I only had $10,000 to start with. And I traded on the daily scale. Like, it can work, okay? You don't have to be sitting looking at charts all day. If you are someone who knows, like, hey, I'm really getting beat up by the shorter time frames, maybe you give it a go with my strategies. If you're still bad at it, look at the higher time frames. You just maybe aren't getting good at the right timing. Maybe you're not good at managing the risk. And therefore, you don't want to sit and stare at stocks all day. Maybe you want to do something else with your time to make money while just using this as some kind of trading over time. You can still make big percentages if you use the higher time frames. That's what I'm getting out of this. AMC could see a further pullback. It's only crossed over for a couple of days. Now, the shorter time frames, we're going to talk about those in a second, but I just want you to understand this is a bearish contrarian signal. It is not overall bearish until you cross that center line. So everyone in the media who's telling you that AMC is dead, it is not. These ones, you're seeing all the little ones are popping multiple times. AMC and GME, one pop. That tells me, oh, this might be the most focused one right now. GME and AMC, I think, are the most beat up by those short sellers right now, and they are the most worried about these two. And so I would really pay attention to that and be confident in the movement that you are a part of. So as we go into the shorter time frames, the 2 hour, where is it? It's negative. So we have to talk negatively about AMC. It's not even contrarian bullish right now, but you see how close it is to the center line. So this is how it's like, if I am not good at trading a 15, a 30-minute chart, I can just trade based on 2 hour charts and manage my risk throughout that. You're not going to have to stare at charts all day to trade a 2 hour trade. I told you guys when I took the volatility play, when Friday was crazy, we were all selling off. What did I do? I stopped going live in the morning. I literally took an hour and a half. I went to lunch. I hung out with my baby girl and my wifey, and we had a good time. And then I came back. The signals were all proven. I kind of timed it out right, so I came back right when it was proven. I took the trade. I went live, and I said, this is what I'm doing. This is a trap. And I said it again, and everyone called me crazy again. I called it days in advance because I was noticing what was going on. Something fishy was happening. So all you need to know is you can trade based on these 2 hour charts. That will allow you to go away from your computer for a while, do something else, enjoy your life, touch grass, and then see this just crossed up. And then you go, oh, that crossed up. Cool. There's a chance that this goes positive. Okay, if that goes positive, you can feel good. And now you might want to watch that trade for a little bit because this stock is rigged. And we show you exactly how to watch that trade. Lastly, for AMC, the 30-minute is different from GameStop. Now, if GameStop runs, most likely you will see AMC run. Most likely you will see it run. Now, it could run at different times, though, because right now the 30-minute, it's crossed. You could say, hey, contrarian bullish signal down here. You don't necessarily have divergence on the MACD and RSI at the same time, so maybe this needs to pop, right? See some kind of pop and then drops back down to give you some kind of stronger base. This is something you can pay attention to on the 30-minute if you're trading based on those shorter time frames. But as of right now, you are just a contrarian bull. This is still a bearish trend right now on the 30-minute, even though the daily is positive. You have to pay attention to these types of things. This will really help you out as a trader to really understand how important the MACD is and how you can use it in your trading strategies. Now, yields, they were telling you that you should be worried and the market's going to sell off because they were going to go higher, and all the data told you the opposite. So they were lying to you here. This is something we pointed out live, that the media directly was lying to you. Bloomberg was lying to you. They were all lying to you. The yields were dropping off while the market was dropping off because of the data, and they were telling you that this was going to scale up, and that was just completely incorrect. That was completely false. So I think they were all in on it, and look at that rigged move at the end of the day. Okay, so the thing about these yields is now you've backed off on a 2 hour. We went back down to our point of 4.495. We're setting up some good levels across all our charts. We've enjoyed this level of 4.495. We've used it ever since, like these pops right here. We just marked it off. And then from there, what do we see? Well, we've seen a lot of times where we've gotten some funky price action around there or some kind of reaction from there, some kind of resistance. This can turn into support. We get a lot of data this week. So all we have to do, if that yield turns up on this MACD, it's very close to the center line. So be cautious with the 10-year yield going higher early on in the week because we get a bunch of data. Now, that could be wrong. It could just fall back off. So the reason that we pay attention to that is the TLT reacts to it. And on the 30-minute, what are we noticing about TLT? Well, it's up here in positive territory, but it still has the opportunity to roll negative. Now, this really does look like you created some kind of maybe cup with a handle, and you maybe make another push higher. We'll pay attention to this. What you want to pay attention to this week with TLT and HYG is, are they dropping off while the SPY heads higher. That is going to be a very good signal that XLU might actually complete that crash signal. The dollar is going to be something very important to pay attention to because this has told us the multiple rigged moves. Okay, the dollar was going up while the SPY was going up. That is insiders selling. The dollar was going down while the stock market was going down. And then it started to go dramatically down. Okay, the dollar is lower as the stock market is lower. So that tells you insiders are buying. And we caught that. That is a signal we paid attention to. Look at the dollar now. It could curl up on this MACD on the 2-hour and it's right back into a positive trend. Positive trend, positive move. Okay, so that could mean selling is coming, but I want to pay attention to if the dollar is going up while the stock market is going up at the same time. That will tell me that the insiders are now selling to the retail traders and they are trying to get the retail traders to hold the bag. And I don't want you to be one of those people. So pay attention to the dollar. We're going to be watching this live. Now, volatility, this was the trade that I took, and I said, hey, there could be some kind of little divergence right here. There could be some kind of divergence at these highs. Looks like some kind of triple top at this moment or double top. And I was like, okay, so this here, all I have to do is wait, right? Wait for that 30-minute bounce. I knew that it was going to bounce for another like hour or so or hour and a half. So I just said, okay, cool, I'm going to go have lunch. And if it doesn't form, then I just don't take a trade. And what's my risk? Zero. My risk is zero. But guess what? The trade's set up, and that's important to pay attention to. Don't overtrade, right? If I want to go enjoy my life and have a nice lunch and hang out with my family, then I could just say, hey, if this sets up, I'll take a trade. If not, I lose nothing. I lose nothing. So what did I pay attention to here? The 2-hour rejected this crossing right here. And right as it was starting to reject, I just looked at a 30-minute. I saw this move right here and I said, okay, this is the buy area for volatility to go down. So I shorted volatility and I shorted it right up here because I know how to get into these a little sooner. I pay attention to these stocks usually every like minute of every day I'm paying attention. And then if I'm waiting for a signal, I can go eat lunch or something like that, right? I can enjoy my life for a little bit. But I saw some signals up here that told me, hey, volatility is most likely going to drop off dramatically. And then I saw XLU and then I saw how the dollar was dropping and I put all of it together and I said, okay, I'm shorting volatility. And boom, that printed very, very well for me. I haven't taken profit on this yet. I'm going to see what happens going on into Monday because I didn't take the biggest position. That's something too. I'm taking smaller positions these days because I don't know when they're just going to rug pull in any direction. I need to be quick with it, take my profit, make my money, get out. And then once I see a bigger signal like a daily MACD crossing over, then I can take a longer play. I can put a little bit more into it. But until I see that, until I see everything forming with those crash signals, I'm not doing it. So what could happen from here? Well, the 2-hour, you notice it is still positive. It is still positive. So even right now, I'm technically a contrarian bear on a 2-hour chart. So all we have to do is turn back up. This was down by more than 10%, which means we do have a chance, 85% chance that we do see a bounce in volatility, meaning a downward move in the SPY in the next 2 trading sessions. So we could get some kind of pop in volatility, but that doesn't have to be some kind of craziness. That's very important to understand. It doesn't have to be a crazy move. That could just be the 30-minute here for volatility turns up for a moment, right? Turns up for a whole day, and then the next day that is pulled down, right? So as long as this is remaining negative or crossing back negative, I don't have to be too worried about this play. Now, as far as when volatility for that crash comes in, this is what I want to pay attention to. Is the SPY making a big upward move very quickly? If it is, and it's starting to get outside of that weekly expected move, do I create some kind of turn up right here by positive territory? Does this just curl down for a full day and curl right back up? This right here will be a signal that volatility is coming back into the market, and it doesn't have to go below 1212. Actually, a crazier signal would be if volatility drops off and actually holds up better. That would mean volatility is even closer to getting up towards 20, okay? So once you get above 20, bad things start to happen. I think you have a good likelihood of volatility actually making a higher low from the previous one, and we're paying attention to that. So we already talked about the daily divergence on the volatility. If you need to see that, go back to Saturday's video and really watch it because it is a very good video. It's very informative of the bigger time frames. So what's the main takeaway for this video is if we're going to complete that crash signal, are we going to see some kind of 2-hour divergence that takes us outside of here for XLU that shows us weakness early on, and then we curl over that daily confirming that crash signal? That is something to pay attention to and make sure the SPY is happening at the same time, right? This is the main takeaway of the video is utilities. This helped us out. throughout last week. We paid attention to it and it really, really helped us out. We can pay attention to other things like the dollar at the same time. We can pay attention to the yields at the same time. There's a lot to look at. But if you are very versatile looking at these things, you can make some money in this market and not at least not be hurt by some kind of big drop. I still think that we're going to go into a bear market. You're going to need some extra skills. So the course will be $100 for the rest of the day today. And I'm probably going to extend that throughout the entire week. You can really hear about that live tomorrow. And if you're new here and you have questions about it, that's perfectly fine. I understand having questions about the course before you take it. Come join us live in the morning and ask some questions about it. And me and other people who have taken it can tell you how it is helpful. I think it is really, really helpful. And that is the overall goal for this channel, is to be helpful, educate you, and then at the end of the day, improve your life. Okay, improve your life. That's a big, big thing. Thank you guys so much for watching. I really do appreciate it. Please enjoy the rest of your Sunday. I hope you guys have a great one. Good luck with your trading this week, and I will see you live tomorrow morning. Peace out.